Hello and welcome to Business Incorporated. I am BC Adebayo. On today's show, WFP launches a €15 million project in Egypt with a German development bank. South Africa extends COVID-19 loans for struggling businesses. And Algeria's annual inflation rises to 2.1% in June. Well, let's begin with the markets. And most of the markets we track here in Africa all began the week in positive territory. At intraday, South Africa's JSE gained 0.38%, while Nigeria's main index rose 0.19%, and that was boosted by banking stocks. Elsewhere in the region, the EGX 30 posted the strongest gains at intraday by 0.51%. Kenya closed positive on Friday. And most major stocks in the Gulf also rose today, largely on the back of their financials, while Qatar's index was hurt by first-half losses posted by Qatar Insurance Company. The Qatari index lost 0.26%, driven down by a 4.3% slide in Qatar Insurance, while Saudi Arabia's benchmark index edged up 0.14%, and that was helped by a 0.7% rise in Suleiman Al Habib Medical Services. In the UAE, Abu Dhabi's index surged 1.06%, helped by 0.7% gain in the United Arab Emirates' largest lender, First Abu Dhabi Bank, while Dubai's main index rose 0.11%. And in Asia, most of the markets also rose on Monday as investors continue to watch for developments on issues such as the coronavirus pandemic. Stocks in Taiwan led gains among the region's major markets as it soared 2.31%. Closing at 12,588.3, with shares of Taiwan Semiconductor Manufacturing Company up nearly 10%. South Korea's Kospi also saw gains as it rose 0.79%, ending its trading day at 2,217.86. Mainland Chinese stocks were also higher, with the Shanghai Composite up 0.26% to about 3,205.23, while the Shenzhen Component added 0.31% to around 12,976.87. On the flip side, though, Hong Kong's Hang Seng was 0.35% lower as at its final hour of trading. In Japan, the stocks were mixed by the end of the trading day, with the Nikkei 225 slipping 0.16% to 22,715.85, while the Topix index edged 0.24% higher to 1,576.69. Let us turn now to Europe, where the markets declined earlier today as investors continue to watch rising diplomatic tensions between the U.S. and China. But let's talk to Chelsea Delaney at the Frankfurt Stock Exchange for more on what's driving today's markets. Good afternoon, Chelsea. It's good to see you. The fears over a second wave of infections sent shares of travel companies tumbling today, and airlines have just started to ramp up flights as the travel restrictions are eased. Is that restart now in question?
It certainly is. There's been a lot of hope in the airline market over the past couple of weeks that there would be a quick recovery for these companies who have been really devastated by travel shutdowns. Many airlines had to cut basically 99% of their flight schedules over the past several months. But as we've seen borders reopen here in Europe and other travel barriers being taken down, there was this idea that these companies would start to recover in the months ahead. That's really all being thrown into question now as we continue to see more and more coronavirus hotspots, both here in Europe and throughout the world. We're seeing new restrictions in places like Hong Kong, China, Australia, and Spain as well. So one of the big concerns on the market today is that the UK and France have both issued new warnings about traveling to Spain. And this is really hitting the airline stocks quite hard. Many of them had just begun to offer more and more flights and more holiday packages to Spain. Now many of those travelers will have to quarantine, and this really just really throws into question the timeline of a recovery for the airline sector. If it's going to take several more months or a year to have a vaccine, we likely will continue to see outbreaks pop up again and again, and that really raises a lot of questions about what the future for air travel is going to look like in the next several months. And so we are seeing this certainly reflected on markets. EasyJet is down about 12 to 13%. Lufthansa is down about 8%. Really some severe declines for these stocks.
We'll see what happens in the coming days. But meanwhile, Chelsea, gold prices hit a new record high as investors continue to seek out safe assets. What's behind the rally, and could gold probably keep rising?
This has certainly been a big and dramatic increase in gold prices. It's just hit a record high, and it seems to just continue rising. Now it's almost at $2,000 an ounce. Really an incredible gain for gold this year. There are several different reasons why that is happening. Gold is really seen as the safe haven in financial markets. It's where you go if you're feeling uncertain about the economic outlook, and the economic outlook has really never been so uncertain. So from an economic standpoint, there are many people worried about the recession and whether we'll see a recovery anytime soon. We're also seeing, as you mentioned earlier, this increase in tensions between the U.S. and China, which had sort of been on the back burner throughout the economic crisis. Now it's really coming back into focus as each side is retaliating against each other. That could become a bigger economic problem for the world as well, given that they are the two largest economies in the world. And then you also have continued potentially inflationary policies from central banks. This is also one of the factors driving gold up. And all of this is really just pointing to a very uncertain outlook that's supporting gold, and it doesn't appear to be going away anytime soon.
Now, Chelsea, let's talk about Volkswagen, which is preparing to take on Tesla with the launch of its electric car. Of course, pre-sales have reached nearly 40,000 ahead of its September launch. Will that be enough to top Tesla, which recently became the largest car company in the world by market value?
It's not enough yet. So Volkswagen is really in the early days of its transition into electric vehicles. This is happening really across the industry. Every car company right now is working to increase their share in electric vehicles, because as we move forward and more emissions regulations are put in place around the world, these companies really have no choice but to become more green. So Volkswagen is now starting to release more and more electric vehicles. This ID.3 is supposed to be a big step for them, because it's one of the first affordable electric vehicles. But they still are only expecting to sell around, they're expecting to produce around 100,000 this year. That's really a lot less than Tesla is selling at this point. Tesla is hoping to deliver 500,000 this year. They are drastically ramping up their production facilities around the world. So Volkswagen is definitely trying to get a foothold in this market. But for now, Tesla, has been doing this for 10 years or more. They are the leader in the market, and they seem to be far ahead of everyone else for the time being.
All right, Chelsea, thank you. We'll see you again tomorrow. In the UK, the FTSE 100 index opened 12 points lower, with airline stocks deep in the red after the government warned against all but essential travel to Spain at the weekend and imposed a 2-week quarantine on travelers arriving from the country. But let's see how these are playing out at intraday, and Juliana Olainka will be telling us. Good afternoon, Juliana. The London markets woke up this morning with Ryanair's unimpressive results, coupled with the imposed 2-week quarantine on travelers arriving from Spain. What is happening to travel stock this intraday, particularly Ryanair, British Airways and TUI?
Good afternoon. It's not a great day for the travel stocks today after what you said was that bombshell announcement by the British government to remove Spain from its coronavirus safe list. This happened on the weekend and apparently affects about 600,000 holidaymakers who had travelled to Spain thinking that they could once and for all get their tanning on. And that's clearly not the case. And there are major concerns that it won't just be Spain. France and Germany are apparently really high on the list, including Italy. TUI, the holidaymaker who you just mentioned, they've said that they will be cancelling flights over the next couple of weeks. We're expecting others to follow. And of course, as you said, Ryanair, which is a budget airline, they announced just this morning that they lost £168 million during this period. And this time last year, they were making profits of over £250 million. So it shows you just how much COVID has dented the airline's revenue, and it's looking likely to continue because, of course, there are some major concerns about a second wave hitting Northern Europe anytime soon. I'll take you through some of those shares and stocks, Bissy. EasyJet, they dropped 11% this morning. IAG, they're the parent company of British Airways, they're down 10%. Ryanair are down 6%, TUI 13%. On the Beach, which is pretty similar to TUI, they kind of pay or do all the holiday bits for you, including travel and hotel. They're down 6%, and Carnival, the cruise line operator, are down 7%. So clearly the market's weighing in on whether or not there will be this second risk. The FTSE All-Share at intraday is down 0.22%. The FTSE 100 is down 0.18%, and the FTSE 250 is down 0.43%. In currencies, the pound is up on the US dollar by 0.61%, unchanged against the euro, and down against the Japanese yen by 0.22%.
In other news, Juliana, Debenhams has put itself up for sale in a last-ditch attempt to prevent a fall into liquidation. Who's bidding for Debenhams?
Oh, well, it's still a fresh story. First reported yesterday in the Mail on Sunday. We're hearing that there could potentially be some Chinese investors looking at Debenhams. And, of course, Mike Ashley, he's the pretty controversial head of the Fraser Group. Debenhams have apparently rejected his interest about 3 or 4 times in the past, but who knows? COVID has changed everything. Debenhams has struggled, as many other high street retailers have struggled. They were struggling before COVID. COVID happened. They had to close down all their stores, and even before they had to do the shutdown, they were already £600 million in debt. So they are in discussions with various banks. Apparently, there's an investment bank called Lazard, and they're overseeing the process. And what Debenhams are hoping is that the directors will still be able to run Debenhams, even if they have a new board of trustees. Who knows whether or not that will happen? Of course, once you're in administration, things do get difficult. This is the second time that they're doing it. And what we're hearing is that they hope that they can resolve this by September. I believe they have over 160 stores here in the UK. About 130 have opened. There's no disclosure about how many staff will be affected by the administration, but of course tens of thousands. But potentially they will be saved. Like I said, this has happened to them before, and they were saved at the last minute. And they would hope that they can be saved because they are an iconic name, and clearly they are employing thousands of Brits up and down the country.
So let's see what happens. Now, how is the report by EY that the UK's full economic recovery could take until 2024 being chewed?
Well, you know, Bissy, to be honest with you, I've got to say anything coming from EY Item Club or the Office of National Statistics is just really reiterating what we already know. I suppose EY Item Club, they have made a little bit of adjustments to their forecast. They actually now forecast the economy here in Britain to contract by 11.5%. Last month, it was 8%. And I think it's because of that May GDP figures. May GDP showed that the economy grew by 1.8%. Now, some economists had actually predicted that the economy should have grown by 5.5%. So any hopes of a V-shaped recovery are clearly in tatters. But I suppose it depends again on who you're talking to, because last week, the Bank of England's chief economist, Andy Holden, said that the V-shaped recovery is fully taking off. So, you know, depending on which statistics or which economists you speak to, things change. But it is pretty worrying. What their economists are citing is the mass unemployment and consumer confidence. In April, the economy contracted by 20.5%. So when the lockdowns were easing the following month, a lot of people had expected, consumers to get straight back out and start buying. They haven't done that. And there are concerns, as I've said repeatedly on this programme, that once the furlough scheme, the government scheme that's paying people's wages, comes to an end in October, there will be mass redundancies. Already, there have been mass redundancies. I believe 70,000 people lost their jobs in June, and the government is still paying furlough. So when that goes away, there is not going to be enough money in people's pockets to start paying for things, to start getting the economy ticking over, which is why EY Item Club predict that it will take about 4 years for Britain's GDP to fully recover.
All right, Juliana, thank you. We'll see you again tomorrow.
Thank you.
And still to come on the program, a look at the future of Chinese lending and investment in Africa. Please stay with us. Welcome back. African governments are reviewing the risk of too much dependence on China after years of lending and investments in the continent that has shored up loans to billions of dollars. After years of borrowing on easy terms, many African countries are believed to be in a debt crisis fueled by the COVID-19 pandemic. Well, joining me now to discuss this issue is the practice lead SSA at Docker Frontier London, William Atwell. Good afternoon, William. Thanks for joining us on the program.
Hello.
Now, let's begin our conversation with Zambia's public debt to GDP, which is heading towards 100% of GDP this year. And like many other countries in sub-Saharan Africa, is at a rising risk of debt distress. What role have Chinese loans played in getting us to this point?
Yeah, you're certainly correct to point out the very high debt loads that Zambia is now encountering, and we know that President Lungu of Zambia has been in touch with the Chinese president in an attempt to try and seek some debt forgiveness or even debt cancellation. So the approach that China is taking here is certainly not one of a blanket debt forgiveness or amnesty program. It's really dealing with African countries on a one-to-one and a case-by-case basis. So there isn't one single approach that they're taking. We know, though, that the challenge of Chinese debt is very significant, and it's certainly been building up over the past several years. Academics at Johns Hopkins University in the US have estimated that it's well over $140 billion in terms of loans that China's lent to Africa. But of course, it's very difficult to quantify that because many of these loans have been lent in a context of quite a lot of opacity. So getting clarity on exactly the details is difficult. But we know that for many SSA markets, China is by far the largest creditor, and that Chinese debt is going to pose a major challenge to public finances going forward.
But what are the chances that China will provide African countries with debt relief or forgiveness, and what forms could this take?
So as I mentioned, it's really going on a case-by-case basis. There won't be one model. We know that Zambia, for instance, has approached China in an attempt to ask for some debt forgiveness on certain loans. Other markets are adopting different negotiating strategies. So Angola, for instance, has been trying to renegotiate its oil for revenue kind of deals that it has with China. Others are seeking for deferments on some of the debt repayments as well. So there are a number of different approaches that could be taken. What we don't think is that China is going to provide a big, generous debt forgiveness scheme. So that's very unlikely.
But will there be any evidence that China's relationship with Africa may look different after the COVID-19 downturn?
It certainly will. On the one hand, we find that the US is to some extent playing catch up with China in terms of its relationship to Africa, in its relationship to business in Africa. So we know that actually one of the largest loans that's been announced recently has come from the US Exim Bank, which is going to that very large liquefied natural gas project in Mozambique. So that's one of the largest projects on the continent right now, and that's being funded with US money. So there is, of course, a rising role of the US in terms of the business environment. But I think the general theme that's going to cover Africa-China relations going forward is going to be a lot more caution on the part of African governments. We know Kenya, for instance, has been investigating the terms of that standard gauge railway project, which is one of the biggest mega infrastructure projects in East Africa. And really, the court has actually found against that project. They found that there were irregularities there. So there's going to be a lot more caution and a lot more scrutiny of how these loans come about, because I think African governments have realized that just taking on too much Chinese debt is ultimately going to be against their interests in the longer term.
Many thanks, William, for speaking with us on the program.
My pleasure.
Now, the United Nations World Food Programme says it will launch a new 2-year project that will support 136,000 poor families in Egypt. The project is valued at €15 million, sourced from the Egyptian-German Debt Swap Programme for 2020. The WFP says the project, in line with its government partners, will build a resilience for families to cope with the social and economic impacts of the COVID-19 crisis. The project will also support the transformation of community schools into smart schools equipped with technology to help foster an improved learning and knowledge environment for students, educators, as well as for other community members. South Africa has increased the term of loans to small and medium-sized businesses to 6 months to help them survive the COVID-19 recession, and has also made other changes to make the credit easier to access. According to the Treasury, the changes to the scheme include making bank credit assessments and loan approvals more discretionary and less restrictive. President Cyril Ramaphosa announced the 200 billion rand loan scheme in April to help businesses as part of stimulus measures to lessen the pandemic impact on South Africa's already shrinking economy. Many of South Africa's small and medium-sized firms were thrown into disarray when the government introduced a lockdown at the end of March to try to contain the spread of the coronavirus. And Algeria's annual inflation rose to 2.1% in June, down from up from 1.9% the previous month due to increases in the price of some foodstuff. According to figures released by the National Statistics Bureau, the consumer price index rose 0.2% in June on a month-on-month basis. The cost of meat and poultry rose 8.2%, while the prices of clothing and shoes were up 0.6%. Algeria, which is a member of the Organization of Petroleum Exporting Countries, has been trying to cut imports of goods, including foodstuff, following a fall in energy export and earnings. And that's our program today. Thank you for watching. I am BC Adebayo.